Welcome back to the Dukascopy TV studio. Now, according to some experts, hedge funds are well placed to do remarkably well this quarter. Joining me to discuss how Mirabaud see hedge funds performing in 2013 is Umberto Boccato. Umberto, thank you very much for coming in today.
Thank you for having us.
No problem. Now, as far as I'm aware, hedge funds aren't really considered by Mirabaud as an actual asset class. Could you tell us a little bit about why that is, please?
Correct. Well, we consider for hedge funds, we consider actually to hire talented managers and competent managers that can actually invest in asset class like equities, FX, commodities, credit, and interest rate instruments, and being able actually to exploit those assets through different types of strategies. In particular, we favor very much long-short equity strategies and macro strategies.
Now, you've been using hedge funds as an investment instrument for quite some time now. Could you tell us a little bit about the history? What's the story from there?
Correct. Mirabaud has a long history, over 200 years, but in particular, 1970s was an important year for the history of Mirabaud. It is in the 70s that we began to identify competent and talented managers that were actually employing hedge fund strategies, and they had very strong similarities to Mirabaud. In particular, they're looking for protecting capital and also compounding strong returns. And this is when we identify strong managers like Tudor, George Soros, and Caxton that were able actually to exploit the opportunity sets in the different asset classes and provide strong capital protection for our clients and also strong returns.
But how does Mirabaud select hedge funds? Where do they choose where to put their money?
Yes, well, what we look for managers, what we look in actually managers is a few important qualities. One and foremost is the competence and the experience of the manager, then a track record that actually qualify the type of experience, and perhaps the most important element we look in managers is alignment of interest. We want to make sure that the managers have their own personal capital, invest in the fund, along the assets of our own clients to make sure that there's no conflict of interest and actually there's common interest in making sure that that capital is protected and also that the good returns are generated out of that capital.
Okay. Now, we're in March at the moment. What about looking forward throughout 2013? What would you say we're looking at in terms of exciting investment opportunities?
Yeah, over the last 4 years, actually, for active managers, in particular for hedge fund managers, the market environment has been quite challenging. Most of the capital markets were driven by the fear of systematic risk, the fear of changes in monetary and fiscal policies, and it's just over the last 6 to 8 months that those type of challenges have faded, and actually the fundamental investments is becoming much more prominent, and a lot of managers identifying fantastic stock opportunities to invest, and so that's a space where managers can actually create a lot of alpha.
Now, with that, taking that into consideration, have you changed of where you put the funds of the hedge funds?
What we're seeing is great opportunities, as I mentioned before, in stock picking. So we're favoring predominantly long-short equity strategies. And to give an example, there's some opportunity set, especially in emerging markets, where often clients invest through passive vehicles like ETF, but this type of solution unfortunately doesn't offer the opportunity set to seize on the consumer growth stories of emerging markets. In fact, most of the ETF and benchmark type of funds, which are passively managed, they miss out the consumer growth story. And whereas the active management, and in particular long-short equity managers, can capture that opportunity set.
Well, Umberto, thank you very much for your insights today. It's been a pleasure speaking to you.
My pleasure, thank you.
Thank you. Well, that's all we have time for at the moment. Later on, I will have a debate from John Hancock and Frank Hollenbeck, continuation on their Eurozone debate. Thank you very much, and bye for now.